Welcome to the Well Off Podcast, where the goal is to motivate, inspire, and share success principles. I'm your host, George Masri. Erwin Szeto is the founder of the iWIN real estate team, which is based out of Oakville. They're a team of real estate investors who coach other investors and teach them how to buy rental properties. He's also the host of the Truth About Real Estate Investing podcast, which I was recently featured on. So on this episode, we talked a lot about how his strategies have changed recently. So he was originally purchasing a lot of duplexes in the Hamilton area and actually buying some bungalows and then converting them to duplexes. And he built a portfolio on his own without joint venture partners. But now lately he's been exploring the US market. So there are a couple of cities that he mentions that he's really interested in. He wants to start off by buying single family homes there and eventually scale the portfolio. So again, if anyone's interested in investing in the US, I think you're going to get some really good things here. There was a lot of data in his decisions to look at certain cities. So Erwin's a knowledgeable guy. He's been around for a long time. If you do enjoy the episode, please leave us a review. That would be greatly appreciated. And make sure to share this with somebody who would appreciate the content. And then finally, if you want to download some reports that are all about real estate investing, there's different tools and things for you to get for free. You can go to www.welloff.ca/podcast to pick up your freebies. So there you go. I hope you'll enjoy the episode. All right, I'm here with Erwin. We actually just switched. I'm in your office today. You just recorded an episode with me. Now I'm recording one with you. So what's been keeping you busy lately?
Been on this huge pivot. I've been a landlord since 2005. I've owned over 40 properties myself. I have over 350 past clients. My team and I have done about somewhere over 440 million in transactions of income properties. And I'm just fed up.
Yeah.
Had enough. Inflation is like all my costs are up. Insurance, property taxes. I have bylaw officers coming after me for rental licensing in my areas. All my costs are up. Rent control, but I'm under rent control, so the investment no longer makes sense to me.
Yeah.
Cash flow is much more of a priority for me. I've been on ever since the summer last year. I've been on this journey to pivot to the States, both my clients and my own portfolio.
So it's almost 20 years you've been investing.
Yeah.
Right? And it's
been through a lot.
Yeah. It seems like people who have been investing that long, like a lot of people want to kind of get out or switch or make a change. And I'm sure we've seen it where somebody sold us a property that's, maybe in their 50s or 60s and they're just done with it. It happens. So tell me a bit more about this pivot. What kind of markets are you looking in? Are you going to continue to grow, or do you just want to replace what you have with something different?
Plan would be to grow. I just see opportunity for me to generate $100,000 cash flow in the States and to do so. But then I'm greedy, so I want the appreciation too. So yeah, I want to grow a portfolio of 20, 30 properties in the States. So it will be growing. Yeah. So I'm targeting. So I'm old school. Like I did 2 years of economics in school. I went to business school. I did 2 years of what's like commercial banking education. So I take a very risk approach method to my investing. I don't like to gamble. I don't go to casinos ever. I will only make bets if they're heavily in my favor. And I feel real estate investing is making bets that are heavily in my favor. Here, I don't think things are nearly in my favor as they used to be. And also just with the everything opening up in the States for Canadian investors, I just see the government, for example, is just way more landlord friendly, first of all. And then the amount of investment the Americans are making in their manufacturing between like electric vehicle manufacturing and microchip manufacturing is just enormous. So I'll be buying near those facilities, near major centers, like in Atlanta, Georgia, like in Dallas, Texas, like in Austin, Texas.
Yeah.
Right.
So this is the interesting thing, because earlier when we were talking, you were saying how some of the investors that were in Florida got wiped out by a hurricane.
Yeah.
Right. And that's kind of one of the risks you take if you're venturing into another market. I don't know if they were aware of that risk, those investors, so that
they were aware of it. It was just such a low probability of where they were because they're northern Gulf side.
Yeah.
It was just like I have friends in Tampa Bay, for example, and historically Tampa Bay was not hit that often. but then they were hit pretty badly. South of Tampa Bay, specifically our friends in Cape Coral were hit very badly.
Yeah.
Right.
So what does that mean? Like, was the house flattened by the hurricane, or?
I have one friend who lost something like 70% of their shingles on the roof.
Okay.
So the house flooded from the top down.
Okay.
And they just renovated.
Yeah.
The only saving grace was the new furniture hadn't been delivered yet.
Yeah. Yeah.
But can you imagine your house flooded from the roof down?
Yeah.
Right. So devastating. Who knows how long it took to get the place repaired? But even once insurance repaired it and all those sorts of things, say a year later, like you went through a year. You lost a year.
Yeah.
And then now the days on market for that area, my friend Andrew Hines was telling me it's 200 days on market now. So you're in a colossal buyer's market.
Right.
So you've likely lost value. So those are the risks. And then on top of that, even if you bought today, like you still have you have massive insurance risk. Like you may not, like I have a friend who lives in Florida who literally told me, you may not be able to renew your insurance.
Right.
Right. Which is why I'm doing so much upfront diligence.
Yeah. Yeah.
All right. Yeah. So I've been researching like crazy, on how to have a low risk, high return investment in the States.
Sure. So in the markets that you're interested in, what are some of the major risk factors there?
So first off, I think it's always you have to compare just what I'm used to. I'm used to being an Ontario investor. And to me, I've always told my clients your greatest risk is the tenant. If you don't screen for a good tenant, then you're in big trouble. And then unfortunately, mental health is a thing, physical health is a thing. I literally have clients who had tenants change, like do 180-degree changes, and their properties were destroyed. Right? The LTB would not save them. Police won't save them. No one saved them. So like I literally have clients where 2 houses are being condemned. Right? So that so they will not be allowed. They're not safe to be lived in. They'll likely be torn down, and insurance will pay out, and they have to sell the lot.
Yeah.
And they're also out at like a year of rent. Right? So the worst case in Canada is just so much worse. I know you have some properties without basements, but most properties here have basements.
Yeah.
And those are expensive. And one of my structural engineer home inspectors told me, every basement will have to be waterproofed at some point. Right? It's just it's a large maintenance item that's going to be down the road at some point. Versus when I go to the States, I'll be targeting areas where it's landlord friendly. So if I have a bad tenant, it's 30, 60 days to get rid of them. Right?
That's you're talking about like from the time that they stop paying rent or cause a major issue or something.
Yeah.
To the time when the sheriff comes or whoever it is comes, it's 30 to 60 days.
Yeah.
Okay. That's pretty amazing. Like that sounds so appealing.
Yeah. No different than like Alberta, which I appreciate why everyone wants to go to Alberta.
Yeah.
But the other nice thing about the States is I can get unlimited mortgages. So that way I can scale a portfolio. Because if anyone talked to you, like you practice as a realtor too.
Yeah.
If someone walked up to you and said, I want to buy 20 properties, you're like, good luck getting mortgages for 20 properties.
Yeah.
Like, good luck getting past 5.
Yeah.
Right? Versus in the States, it's DSCR. It's debt service ratio mortgages, commercial style mortgages, or even on single family homes. As long as you can find deals, and I can find deals all day, as long as you have capital, you can get as many deals as you want.
Yeah.
So I can scale a portfolio where it's landlord friendly and where the economic fundamentals are better than here.
Yeah.
And my risks are significantly lower. Like my point about basements, where I'm buying, there's no basements. So there's no basement to leak or crack, and generally just buying newer homes as well.
What were these areas again that you were kind of exploring?
So for example, I'm going on vacation. You probably release this after. I'll be by the time this comes in, I've returned from my Georgia trip.
Yeah.
So I'll be traveling from Savannah, Atlanta, and a place called Chattanooga. Now they each have major economic stories, right? Hyundai is the world's third largest automotive manufacturer, is investing $7.6 billion in Savannah, Georgia. It's the largest investment in the state history, right? It'll create 8,500 jobs, plus another 6,000 for suppliers, and the city population is not that big. And for anyone I know who's been to Savannah, everyone tells me it's like one of the nicest places in America, period, right? So if it's a nice place, generally people want to live there. If you have job creation, or the average job pays you like 56,000, 58,000 American plus benefits, 58,000 American is about 78,000 Canadian, which is higher than the household average Canadian.
Yeah.
So it's really good money. And also appreciate that we're in a lot of the states, you can get really nice houses for under 300 grand American. So if I buy a house for like, let's do some simple math, like 270, say I buy a house for 270, that's like what, 4.5 times someone's annual salary for one individual?
Yeah.
Very affordable.
Yeah.
Right? And again, I want to buy near where manufacturing is coming. These manufacturing jobs are coming because there's tons of precedents locally for when major manufacturing comes in, real estate prices explode. Like Woodstock, Ontario, like Alliston, Ontario. Like my friends are experiencing right now in Windsor, Ontario with the Stellantis battery plant. Right? So but I'm also buying near major centers. Deals I'll do will already cash flow as is. And so I view this as being pretty conservative investing with big upside.
Yeah. So you're still in the early stages of this, right? Like you're looking to buy in the next couple months, it sounds like, and you're preparing yourself by selling. You've sold off a couple of properties in Ontario.
Sold one last year, which remember last time we recorded, we sold that one already, and I've sold 3 that closed in May.
Yeah.
So in May, I'm writing offers in the States. My intention is to buy at least 3 houses this year.
Okay.
In the States, yeah.
In the States.
As many as Terry will let me buy.
All in one county or one area, or are you gonna?
No, I want to diversify.
Okay.
Yeah, because I mentioned like I'd like a house in Atlanta, I'd like a house in Savannah, I'd like a house in Chattanooga, I'd like one in Austin, Texas.
These are kind of feelers, right? You want to see what markets you like best, and then start focusing on them.
Not so much feeler; it's just diversification.
Okay.
Because like I said, I mentioned like I'm buying near manufacturers. Like for example, in Chattanooga is where Volkswagen is investing heavily. So their top selling electric vehicle SUV is made in Chattanooga, the ID4, and and I was talking to a client last week. He's ex Volkswagen. He told me they're bringing the ID8 as well. I don't even think that's public information. This comes out later, anyways. The ID8 is the very big one. I think it's the Atlas. My point is that you don't know which automotive manufacturer is going to make it.
Yeah.
So I want to diversify, right? I'm just my own biases. I've never been a fan of North American made cars, other than that Tesla, which is funny because I drive a Tesla. But Ford and GM are investing crazy amounts of money. So I'm partly not just betting on real estate. I'm also betting on that major employer.
Yeah.
Whether or not they'll be around for the long term.
Okay. What are you doing in terms of on the back end to make sure that you're able to be efficient when you're investing in the US? You've probably already kind of looked into setting up corporations and that sort of thing. Can you talk a bit about that? Yeah.
I need to create a social insurance number for a U.S. entity, so a business. So as individuals, it's really hard to get a SIN number, social insurance number in the States. But for businesses, it's quite easy. It's only a couple $100. You don't even need a lawyer to do it. So that's the easy part. And thank goodness I married my accountant. So that really makes all of that a lot easier. We have a very popular accountant already in Florida who is Canadian, who lives in Florida. So the back office is honestly quite easy.
Are you setting up a corporation in Florida? Like, is that going to be the home state?
No, not Florida.
Yeah, because I think there's tax benefits to setting up in certain states, right?
Yeah, it's really more a problem for my wife to do.
Oh yeah, okay.
Yeah, that's why I married her.
Yeah. Fair enough.
But yeah, I'll have just for our profile, we'll likely be doing limited partnership.
Okay.
That's the entity that will own our properties in the States.
Are you going to be raising capital for this, or you're because from what I remember last time I spoke to you, most of your portfolio here is just like you and Cherry, right? You don't really have too many joint venture partnerships, that sort of thing.
No.
Yeah.
We have busy enough lives. We're not. Luckily, I've been at this for a long time too, so I was able to self-capitalize my investments. And yeah, our plan is really to self-capitalize my investments, and then that's partly just my own bias as well.
Yeah.
I get there's a time and place for passive investments, as in like being a passive partner and whatnot. But my clients, like straight up, like I helped them make a lot of money, and how they made a lot of money was owning the property directly in just them.
Yeah.
They didn't need necessarily, because my strategies are a lot simpler than yours. We buy a property, we renovate it, rent it out, go get a new mortgage. We're doing basically all market stuff, so our properties were not nearly didn't need as difficult of property renovation as yours do, which is why you always get better prices than we do. But our strategy's been a lot simpler.
Yeah.
And then just let the market take care of everything else, and it's done very well. Like I've over 45 clients who made $1 million or more on their income properties.
Yeah.
So my own personal belief is that you make the most money as a direct investor.
Sure, of course.
But yeah, that's exactly why you're the direct investor yourself.
Yeah.
And again, I don't want to complicate things. Like my wife has enough. Like my wife has 2 accounting practices. We don't really want to do anyone else's accounting for them. I don't need more people to do more investor relations. So we just invest our own capital.
Yeah. Okay. So you've been, as we mentioned earlier, investing for almost 20 years, basically. And your portfolio here, I'm sure, has grown quite a bit.
Oh, yeah.
You've done well here. But did you just find that you didn't have the cash flow you wanted? Is that why you want to switch over and go to the States? Is it just for the additional cash flow?
It's a lot of everything. Again, I don't have control. Like I mentioned, like if one of my tenants didn't pay me, I don't even know how many tenants I have. I have a good number of tenants. If anyone didn't pay me for a year, I'd be pretty pissed off, right? And that can very well happen here for any investor. I've had a tenant trash my property, not pay me rent for I don't know how many months. This is a while ago now. I had a tenant literally stuff his own household garbage into my toilet, into the shower drain, and then ran the taps. He ran the hot water.
What'd you do to him to piss him off?
He had more of a mental health issue.
Okay, fair enough.
Unfortunately, he had a rough life growing up. He was a foster child.
Okay.
Yeah. So it was more that.
Yeah.
And he called every city department on me as well, and they all were sided with me because they realized he has mental health issues. Right. So they didn't help him at all.
Yeah.
Right. and actually they were all very kind to me because they understood, like, we know you're not the problem.
Right.
But yeah, so then he caused, I don't know how many he flooded my basement. I don't know how many thousands he caused me in damage. And we called the cops because he vandalized my property. Yeah. They wouldn't do anything because they said, this is a tribunal issue.
Right.
This is a tenant landlord issue. So I have no rights. So why would I accept this?
Yeah.
Again, I talked about how I'm doing a ton of diligence on where I want to invest.
Yeah.
So for example, I start with where a manufacturer is investing billions of dollars. For example, GM is investing something like $7 billion in Detroit, Michigan, so they can start building electric vehicles, trucks, whatever. Right? It's going to create like an obscene amount of jobs, like 6,000 plus or something like that. So then I started doing ChatGPT and Googling how are landlord laws in Michigan, in Detroit, Michigan. And what it returned me was, if a tenant doesn't pay you rent, it could be 1 to 3 months before you get a hearing.
Yep.
I'm like, that's too long.
Yeah.
I like Georgia, I like Texas, I like Tennessee better, right? Yeah. So I won't accept a 1 to 3 months wait for a hearing. Why would I accept 9 to 12 months for a hearing here in Ontario?
Well, so speaking of that, if you are looking at Savannah, Georgia, let's say, how do you know if whatever the municipality will side with you, the landlord tenant board there, if the tenant vandalizes your property, for example? Like, how do you ensure that that's the case?
Well, part of what makes this all easy for me, because I mentioned I'm targeting multiple cities for investment. Part of the reason I'm able to do this is because of my partner in the States. They come from the REIT space. For example, the chief investment officer is like Starlight Investments. Starlight Investments is, you know them, like the largest apartment building owner in Canada. Dimitri's his name. He's the chief investment officer of Share. He helped build their U.S. portfolio to bring it to 20,000 units. He's usually dealing with that type of portfolio. So he knows more about U.S. investing more than anyone I know. So I'll be leaning on him for me making the right investments. And his compensation's in line with mine, right? I don't buy more property unless I'm successful. So I have highly qualified people looking out for my best interests, right? And the nice part is I only pay them fees.
Yeah.
I don't give up any equity. I don't give up any profit share.
Mm-hmm.
I still maintain direct ownership. It's my house. I control it. And again, landlording in landlord-friendly states is a lot like commercial. If I don't like the tenant, once their lease is up, I can give them 30 days notice to leave.
Yeah, you could do that?
Yeah.
That sounds so foreign to me.
But also, again, here's the foreign part as well. If you have a good tenant, you have no reason to ever ask them to leave.
Right.
Because you can raise rents. There's no rent control.
Mm-hmm.
Right? And this is important to me because I want massive upside. I'm buying near major employers who are going to create thousands and thousands of jobs. So there will be pressure on both rents and prices where I'm investing. And no rent control means I can raise my rents, increase my cash flow over time.
Yeah.
Because I have a goal of achieving $100,000 cash flow a year. So I need these things to be in my favor in order to get to my goal.
You're right. Yeah. I'm just thinking, even if you are buying an apartment building, let's say, eventually you said you might be looking at that, and you can just raise the rents to market. And a lot of people are doing this in like Edmonton and these areas, but you can very quickly transform a building if you are on top of it, if you're managing it actively. You can increase the net operating income and refinance that thing pretty fast, I would imagine. So it's a huge benefit. Now speaking of Edmonton, why is it that you didn't want to go towards Alberta instead?
Because scaling a mortgage portfolio is still difficult anywhere in Canada.
Yeah.
Generally, the people these days are capped around 5. I remember talking to a mortgage person about just a few years ago. Less than 1% of our investors in our community have over 10 properties, right? Versus in the States, as a non-resident, I can get a DSCR mortgage. As many mortgages as you want. It's no different than here. As long as your numbers make sense for a DSCR, for a debt service ratio mortgage, debt service coverage ratio mortgage, you can have as many mortgages as you want.
Yep.
It's no different than the States. And I can find single-family homes with cap rates of 5 to 7% all day because I have the right connections. I have the right partner to do this, who's going to source these deals for me, and they're going to manage the manager to manage my properties, so I don't have to do anything.
Yeah.
Right? Kind of like you. Like, you're the asset manager for your clients. Tenants and property managers never call your partners, right?
Right.
So I want to be that guy.
Yeah.
But not give up any equity.
Yeah. Another thing we were talking about a little bit earlier was how you're noticing a lot of your clients have slowed down when it comes to looking for properties in the last maybe 2 years or so. Tell us a little bit about that. Why do you think that's happening?
So partly, I've told all my clients, before you acquire another property anywhere, you need to look at what's available in the States. Because I believe that should be your baseline that you compare everything else against, right? So let's not use my clients because I'm very biased towards the US right now. Let's use the example of I had 3 income properties for sale just a few months ago. There were student rentals, 2 in St. Catharines, rented to Brock students, 1 in Hamilton, rented to McMaster students. I sold one pretty quickly in St. Catharines. The buyers are from BC. Their child goes to Brock University. They need a place for that kid to live. So in my books, that's owner occupied, right? The kid's going to rent out rooms to his friends and make money that way, which is wonderful. I think that's amazing. But my other 2 properties were just sitting. I didn't sign new leases with the intention that someone could live in it. I was doing this strategically. They weren't selling. So then I went and got leases. I signed for historically high rents. So the house in Hamilton, I was asking $850. I signed a lease for $6,000 plus utilities.
Well, what do you mean $6,000 plus utilities?
The lease is $6,000
for the whole property.
For the whole house.
For the whole house, $6,000.
It's not even a duplex.
For a single family home.
Yeah.
That's
crazy. It happens to have 7 bedrooms, but
7 bedrooms, like what? 4 upstairs.
It's a 1.5 story. So I have 3 in the top, 2 on the main, 2 in the basement.
Okay.
Yeah. Which works out to roughly $850 per room plus utilities. Yeah. And rented out the first weekend.
So why did you do it that way instead of per room?
This is the thing about student rentals. It's a bit murky, right? It's looked upon differently depending on who you are. The fire department has different opinions on it versus the mortgage, your lender, your bank, versus the bylaw officer, versus me, the investor, versus the tenant.
Yeah.
So I deliberately priced my home for rent, and also I'm signing a single lease. It's a single lease as well. So my point to my tenants is, this is what I want for the house. You guys divvy up the rent however you want.
Right.
For example, whoever gets the master should pay more than the person who gets the basement bedroom.
Right.
Right. So you guys figure it out. But on average, it works at $850 a room. Right. And that might be a little bit low, actually. I probably could have gotten more rent.
Yeah.
But my point being was that no one was making me offers until I signed that lease. So there were no. So I was only able to get investors off the fence when I showed them, when I had my lease.
Right.
Right. And like, you're a real estate investor. I got $6,000 for a house.
Yeah.
Does anyone get more rent than that?
That's a pretty big number.
Right.
Yeah.
That's more than any duplex.
Yeah.
Right.
Significantly more.
My point, and I only got 2 offers. So doesn't like, for all indications to me, then there aren't many investors out there buying.
Definitely a lot less now.
Yeah.
Yeah.
Nothing. Yeah.
Well, what was the, if you don't mind sharing, what was the asking price on that place?
$850.
Yeah.
I eventually sold it for. What did I sell it for? $868,000.
Oh, you sold it over asking.
Yeah.
Okay.
Yeah. But again, so it's I've been a realtor since 2010. So this is the quietest market I've ever seen for in terms of investor appetite. Like, this is nothing compared to 2017. I wasn't around in 1988.
Yeah.
But I'm guessing it's something like that.
Yeah. Are all your properties student rentals?
No. I deliberately sold my student rentals first because there's the most demand for them.
Yeah.
Just because there's a housing crisis, university students are bearing the worst of it. Like, for example, my rent last year went up. Market rent last year for my Hamilton property, it went up 40% over the previous year. Last year. This year, it went up 20%. And I went from inclusive utilities to exclusive utilities. So you could argue I went up another 30-40%.
How do you do that? Do you just get them to split the utilities?
I don't care. It's their problem.
Like, you just put everything in your name and you figure it out?
No.
Not your name.
The tenants.
The tenants.
Put it all in their name.
Yeah. The tenants. Okay.
I've also sold it, so I really don't care.
But water, but water, they can't switch in Hamilton, right? It has to stay in your name?
I believe they still can. Yeah.
They can?
It's just it falls back to me if they don't pay it.
Right. Yeah.
You see what I mean about rights?
Yeah.
I'm pretty sure all the utilities fall back on me if the tenants don't pay.
Yeah.
Like the utility companies don't go after the tenant.
No, of course.
Right. They come after me.
Yeah.
And then they can, and if I don't pay for it, they put it on my property tax.
Exactly. Yeah.
Right. How is this fair?
Yeah.
Right. I didn't consume the water or the utilities.
Yeah.
Why am I paying for it?
Yeah.
Right. So again, it's not fair here. Capital, just like I said on your when I had you on my show, capital wants to find its least path of resistance for the risk adjusted returns. So that's where my money is going.
Yeah.
Right. And and I'm selling one more house because my tenants just gave me one of my duplex tenants just gave me a notice. So I'm going to sell that one this year as well. And I'm going to deploy that in the States.
Good thing your wife's an accountant.
I will. Yes.
A lot of properties in 1 year.
Yes. Yeah. And some are owned in a corp, some are owned personally.
Maybe you should do a VTB on one of these.
I want max money.
Yeah.
If someone's willing to pay me max money on a VTB, I'll consider it.
Yeah.
Right. My priority is to maximize my price.
So are you looking to sell like potentially a couple more?
I want to sell all of my long-term rentals here in Ontario.
So I guess anyone listening, if they're interested, they can reach out to you and see if
they can.
Yeah.
But from my experience, what I'm seeing in the market, it is the end user who's going to pay me the most. So someone who's going to move in.
Yeah. And
I already know from my friends, like I was telling you before we were recording, my friends in Toronto are telling me duplexes with no tenants in them are on absolute fire.
Yeah.
Right?
Yeah.
And my point about downtown Toronto is it's usually the epicenter for the Golden Horseshoe.
Yeah.
So I know that if my tenants leave the property, then I can get maximum price on it.
Yeah. I was just thinking about a VTB. Like if you are open to that, maybe there's someone listening that can make the numbers work, pay you your money, but also get a VTB and make it work for them.
Potentially.
Yeah.
Yeah. We'll see.
Yeah.
We'll see. Yeah. But like I said during our show when I interviewed you, most realtors don't know how to do a VTB. Yeah.
people are more open to it now because things have slowed down a little bit. Like, I think realtors, at least from what I see, they're not going to shut something down right away because they don't understand it. They don't have people calling every day necessarily about a property. So if you say, hey, I have a solution for you, but it means this, then they're more receptive, I find.
Yeah, maybe on this property, I'd consider it because I've already sold 3.
Yeah.
Right. I have ample capital to execute my plan in the States.
Yeah.
Deferring taxes wouldn't be bad, but again, I kind of want top dollar.
Yeah.
Maybe it's an ego thing. I should probably run it through.
Well, usually, like if someone's getting a VTB, they're willing to pay top dollar because there's benefits for them as well.
Yes.
Right. So it's kind of a win-win situation.
That's what it should be.
Yeah.
So many investors are cheap.
Yeah.
Which is like end users, people who are going to occupy the home are the ones who are paying the most money.
Yeah.
Yeah.
So just out of curiosity, that student rental you sold, was that to your own clients or did you to the open market?
My Hamilton one, that was to another Rockstar client.
Okay.
Yeah. So a Rockstar agent brought me that client. And the 2 St. Catharines ones, I had a Rockstar agent interested, but I unfortunately I sold it to another agent before that. But yeah, that's
one of the cool things about that community, right? You guys can help each other out and you bring each other clients. Can we talk a little bit about student rentals? Because I am curious. I've never owned a student rental myself. Yeah. What's it like now with, you said bylaw looks at it a certain way. So if you did rent that property out room by room, would you have potentially issues with bylaw? Like, is there, what's the term here? The licensing for student rentals in Hamilton?
So if you're renting out room by room, you probably bought your property in a softer market. So that's the first thing you shouldn't do. Softer market means there isn't strong enough demand. Like where my properties are in St. Catharines and Hamilton, I always get 12-month leases. Versus if you're in a softer market, tenants are going to come to you and say, I don't want to pay for the summer.
Yeah.
So you could be 3 months without rent. What landlord wants to be 3 months without rent? And then if you have individuals, and just my experience, if you have individuals that come to rent from you, there's way more likely they're going to conflict with each other and cause you more headaches, right? So I highly do not recommend renting a room by room, and that's more common in college rentals. My focus has been largely on university students.
Okay.
Yeah. The university students, they stay for longer. They usually come from families of more affluence than college kids. Yeah. College kids often have to pay for their own way versus my university students are often really rich kids. Yeah. Yeah.
So you're doing like one lease for all the students under that property usually?
Yeah. And just like any negotiation, if you have a position of strength, like these are my terms. Just like I did with my Hamilton property. I don't want to pay for utilities. Yeah. Right. Because I'm in a position of strength, I can do that. Right. Because you've been around. If you're not in a position of strength, the tenant may ask for inclusive utilities, and you may take it. Yeah. Well, I've heard a lot of stories of that where students kind of take advantage of utilities, right? Yeah. Start like an Ethereum mining business. Yeah, exactly. If tenants or utilities are inclusive. Yeah. So one lease across for all the students. Is there any other tips you have for anyone that's kind of looking at student rentals? I know you're getting out of the market, but for anyone listening that's kind of getting into it and they want to see a $6,000 lease, what tips do you have? You better have a lender who knows what they're doing. Yep. Because most don't. Just like I said, like most realtors don't know how to handle a VTB negotiation, a vendor take-back mortgage. Same with student rentals. Most lenders have no idea how to deal with it. Right. I don't know what to say. Rental licensing, beware whether or not you're in an area of rental licensing. So St. Catharines, Hamilton, yes or no? St. Catharines does not. Hamilton, they're in pilot. Yeah. Yeah. It's funny because with the city being hacked, I think everything's on hold with the pilot rental licensing. I didn't know about the city being hacked. The city got hacked, yeah. Like you're talking about the city of Hamilton database, there was a breach? Everything got hacked. Everything's slow. Yeah. Okay. Yeah. The hackers want I don't know, some sort of absurd amount of money as a ransom. Yeah, they're being held for ransom. Yeah. Oh, interesting. Yeah. Is this just recent? 3-4 weeks ago. Oh, okay. Yeah. So everything's slowed. So it's a mess. Cities decide they're not going to pay the ransom. so they're just going to try to deal with it.
Yeah.
And then since then, the bylaw officers have not been contacting me as much around rental licensing. And that's the other thing. I have permits for everything, right? Like the house I'm selling, the duplex I'm selling, I have permits. Like you're the city. You know perfectly well you've inspected my property for safety, right? And you still want me to go through rental licensing. Why?
Yeah.
Right? So I'm really happy when they call me next time that I'll let them know I sold the property. Tenants are moving out, right? I am removing supply. Because again, I'm most likely to sell to a homeowner. I am removing rental supply from the market.
Right.
And who's making me do it? Largely the government of all levels, right? So I'm excited to do what feels right and also make more money in the States.
Yeah. Are you considering getting student rentals in the States as well, or
maybe for phase 2 or 3?
Yeah.
Just not right now. Again, I'm a very conservative person. Like I use the scuba diving analogy all the time. When you're learning scuba diving, you take your beginner's license, and then once you go for your advanced, you're only allowed to do one advanced thing at a time. Like you can do nighttime diving, you can do cave diving, you can do what's called penetration diving, like going to like a shipwreck, right? You may not do 2 at the same time, right? So I'm entering a new market. I'm going to do just a strategy I've done for nearly 20 years. That's worked out very well.
Yeah.
And just start with single family homes.
Sure.
And also part of my requirement is, you asked me about risks, right? For my research, my greatest risk is property management. If property management fails me, I will fail, right? So my requirement is to only do investments where I can get institutional grade property management. So the folks that have like 1,000, 3,000 houses under management in the area, something like that.
Yeah.
Did I say 300,000? 1,000 to 3,000 houses under management in the area. I want only the big outfits to be working on my stuff.
Yeah.
So they have staff. I get economies of scale. They have great systems, all sorts of things.
Yeah.
I'm done with small property managers, which I've had an extensive career with.
Would you say student rentals need more attention than your single family like buy and holds, or less, or about the
here's
same?
Something simple. I don't have my calculator on me. So again, let's take my master house for rent, for example. I was getting $6,000 rent on an 850 property. So that's close. That's I think about 8.4 gross rent yield. The annual rent is about 8.4% of the price of the house.
Yeah.
Right. I can get the same in the States on a single family home.
Single family, yeah.
Without having 7 individual young adults living in my property.
Right.
And I can be on the right side of everybody. Because like I said, with the student rental, everyone looks at that differently. Bylaw doesn't like me. My neighbors don't like me. The lender probably doesn't like me. Right. The tenants don't like me because I'm getting all this money.
Yeah.
Right. It's a 100-year-old house too, versus I can buy something way less trouble in the States for the same gross rent yield.
How old are the homes that you're looking at? Like, let's say in Savannah, are you talking about a 20-year-old home or a 100-year-old home?
It'll range. Again, every market is different, but I generally don't have to buy anything nearly as old.
Yeah.
I generally don't have to buy anything older than like 1980.
Right.
Right. And again, these properties don't have basements, so I won't get leaks in the basement. And it doesn't snow generally.
Yeah.
So then the whole house lasts longer.
Sure.
You and I have lots of roofs.
Yeah.
We know they do not last 30 years as the shingle is rated for. But in the southern states, they do last 30 years.
Right.
So my repairs and maintenance are lower in the States as well. And again, I can do single family and get as good or better numbers than I can here.
Yeah. And you have the open gun policy as well?
I don't think I'll do anything with leases around that.
I'm just joking. Just because I had someone who was saying they were exploring Texas and there was an open gun policy there, so people were just walking around with their guns strapped to their chest all over the place.
In my trip to Austin and San Antonio, I personally didn't see it.
Yeah.
Outside of the gun range and law enforcement.
Yeah.
So yeah, I didn't see any of the guns, but I know they're out there. But the other side of it is that as well as that the whole Southern hospitality stereotype, it's so true. People were so kind and polite.
Yeah.
And even me, like, I'm a visible minority.
Yeah.
So that was like really important to
Do
me.
you think you're Mexican when you're there?
Me? No, I think people know what an Asian looks like. All right.
There's a lot of Mexicans that look Asian, from what I've seen.
What I also noticed, there's a ton of Indian people, and I'm sure they get it worse than I do. But again, like I have one Indian friend who has a lisp, who lives part-time in Austin, and he loves it.
Yeah.
And like, you can't be more of a visible minority.
Yeah, you definitely don't get that sort of feeling as somebody who doesn't live there. Like you always think about the racism and all that they experienced in the past, but yeah, it's interesting to hear you say that they're very kind to people.
Very kind. Like I was just in Milton on the weekend at the big outlet mall, and people like don't even hold doors open for you.
Right. Yeah.
Right. Whereas again, like my experience was so much better in the States.
I've experienced that too, actually, in like California, and people are very nice there. Like they would definitely open doors and hold them for you and all that.
Yeah.
Yeah.
And then even the staff, like I remember being at Costco, is like, I think part of it is that they're less busy. They're not nearly as busy as everything up here is, because we're just so overpopulated here. I remember the Costco cashier was like really grilling on me. Did you find everything you needed? I'm like, yeah. Are you sure? I was looking for Cheetos. He gets on the phone like, yo, Bob, this guy's looking for Cheetos. Can you go check?
Bring this man some Cheetos.
Bring this man some Cheetos. like they were like interrogating me to like make sure I was really happy.
Yeah.
You don't get that here.
Yeah, that's true.
Everyone was just so polite and kind, way more. And like we Canadians are like apparently supposed to be polite and kind, but again, my experience in Texas was way better.
Yeah.
Yeah. Same thing with Atlanta. When I was in Atlanta, like Southern hospitality is a real thing. Yeah.
Cool.
So I had an absolute blast on my trips, and I cannot wait to go to Savannah and Atlanta again, and in Chattanooga, where Volkswagen is. Yeah.
Sounds like you've got some exciting times ahead.
Yeah. I've never been so excited about real estate.
Yeah. Well, maybe when you first started, that first property you bought.
But that's all naivety.
Yeah.
Dude, I remember my I think it was our second tenants didn't pay us.
Yeah.
Right? So I think we were like,
it's a wake-up call, eh?
it was. I think it cost us like $10,000 because we hired a lawyer too. We didn't know what we're doing. We hired a lawyer to come to the tribunal with us.
I had the same experience on my first property. Tenants stopped paying. I picked the worst tenants possible.
Yeah, I'm with you. Yeah.
Oh man, and then you're worried. You don't know how you're gonna pay. Well, you know how you're gonna pay, but you're like, oh, how long is it gonna be before these people are out and all that? Yeah.
Yeah. This is before the pandemic, right?
Yeah, this was 2017.
Yeah, the good days.
Yeah.
It still sucked.
Yeah. Right? My mortgage was like $600 something a month, right? It was so low, but still, I was still worried at the time. You know. But anyway, we covered a lot of different things. Do you feel like there's anything we should touch on that we may have missed?
Again, I think everyone should look at the States as a baseline. I actually just finished a report on it. I've been asked many times for my research, and people are always asking where to invest. So I actually just created a report, best places to invest in the U.S. for 2024. And then, anywhere on my social media or websites, they can pick that up. And also in that report is I research a lot, and then the mistake I was making was I wasn't taking enough notes. So then over March break, I started taking notes on all the manufacturing projects that are going on in the States. So I want to share this because I think it's interesting. Like everyone in our community is talking about Windsor and St. Thomas, because Windsor is getting a Stellantis EV battery. Stellantis is partnering with LG to manufacture batteries. It's about 2.6 billion US dollar investment, create 2,500 jobs. St. Thomas, Volkswagen has a partnership with another company to manufacture batteries in St. Thomas, Ontario. That'll create something around 3,000 jobs, right? So those are as far as my research can find, those are the only two major investments I can find, right? Versus in the States, I can't even count how many I've found in the States. But here's some simple numbers. America population is 8.5 times bigger than Canada. 8.5 times, right? The investment going on in the States is about 27 times bigger than what we're receiving between the Windsor and the St. Thomas plants. 27 times bigger. And it will create 18 times more jobs than the job creation we're seeing. Texas, I've mentioned, is one of the places I'm looking to invest. Texas's GDP, gross domestic product, their economy, is $1 trillion with a population of 30 million. Yeah. When Canada got to 1 trillion, the population was about 39 million. Right? So the state of Texas alone is that much more efficient than the country of Canada. Right. And also their costs are lower. For example, you've built, what's the cost to build per square foot? around here?
I don't know. I never broke it down like that, but it also really depends on what you're doing. I've never built from scratch. I've only kind of converted.
That's okay. I was talking to a custom builder in Thornhill the other day. He tells me it's over $400 a square foot to build.
Yeah, it makes sense.
Right. Guess what it is in Texas?
300 or less.
110 US per square foot.
Cool.
Right. So I think something's wrong here.
Mm-hmm.
And don't get me wrong, prices are going to go up here. For a lot of the wrong reasons. But prices are going to go up in the States too. And, my friend Christian says, I like deterministic investments.
Mm-hmm.
I like where I can affect the outcome, right? So I like the idea that I can buy investments that work today for under $300,000 that will cash flow positive for me, and with a big upside of being near a major manufacturer that's being built that will create thousands and thousands of jobs, right? So I view my investment as being relatively lower risk than anything here, mm-hmm. with potentially very significant upside.
Yeah, it'll be interesting to see how things roll out, like what counties and what areas you focus on, because I'm sure you're going to pick and choose certain areas that you really like. And it sounds like there's going to be a lot of activity over the next few months for you. So I'm sure everything will go well. I'll have to revisit this with you in a couple months and see where you're at. But this was great. Thank you for sharing all that.
Thanks, George. Thanks for having me on.
Just to kind of finish things off, do you just want to tell people how they can reach you and what services you're offering?
Oh, so yeah, you asked me if I'm taking on partners. So again, my preference is for people to do direct investments. So I'm actually working as an advisor to an asset management company called Share. So I have clients who are already buying properties in the States, and Share makes it as incredibly easy as possible. We're trying to be like the Wealthsimple, but for real estate. Mm-hmm. Make it as easy as possible for Canadians to own income properties in the States, and they're going to make this as passive as possible. The only real work I have to do for myself is just do my diligence, read my home inspection reports, mm-hmm. get my financing in order. But again, it's way easier in the States because it's all debt service ratio.
Right.
It's nothing like here.
And there's way more lenders, right, out there?
There's probably 1,000 lenders, I'm told.
Yeah.
Right. So it's probably 10 times easier to scale a portfolio in the States. Mm-hmm. And I finally found a path to 6-figure income from the States, from rental operating income.
Yeah.
Versus here, so many people are focused on refinancing, right? Yeah. So yeah, anywhere people follow me, I have a podcast, Truth About Real Estate Investing podcast. Mm-hmm. So people can pick up my report there. They can pick it up. I have links on my social media. My name is incredibly unique, so you can find me on Facebook or Instagram. I'm not on anywhere else.
Yeah.
Yeah, and they can pick up my report for free there. And if anyone can't tell, I can't stop blathering about this. Mm-hmm. Because you and I both know, like the pre-construction condo market is absolutely enormous here in Canada for investors.
Right. Something
like half of them are owned by investors. And how I see it is, I can't see why anyone would ever buy a pre-construction condo as an investment ever again if they see what we're offering in the States.
Right. Yeah.
Like I can buy a house. Like to buy a house in the States, my capital only has to be like 50, 100 grand Canadian, something mm-hmm. like that. How much do you put down on a condo?
Here?
Yeah.
Well, you're talking about like probably at least a $500,000 purchase price. So, what would that be? $200K minimum.
And then what's your cash flow?
Yeah, negative.
Negative 2,000.
I don't know. I'm not sure. Yeah, probably not that high on a $500,000 property, but yeah, it's going to be negative for sure.
Sorry. So after paying property management, vacancy. And this is a common question I ask people, Canadian investors these days. I was asking Austin Ye this question.
Yeah.
And I'll ask you this as well. What do you factor in for bad debt? Inability to collect rent. Mm-hmm. A lot of people, Canadians, don't think about it. But I think that should be something every Canadian should think about.
Yeah. Are you talking about like a vacancy?
No, bad debt, as in they're not paying you.
They're not paying you, yeah. Yeah.
Right. Like every contractor knows there's bad debt. Every business owner knows there's bad debt.
Mm-hmm.
Every landlord who's been around long enough knows there's bad debt.
Yeah.
You'll never collect from the tenant.
That's true.
Right. So factor that in, or even your cash for keys number. For me, it was my tenant asked for 6 months.
Yeah.
Right. So factor all these things in, and yeah, when you do factor everything in, I can't see how an American investment doesn't make more sense.
Sure.
Especially when you can make it as easy as possible as we do at Share.
Yeah. Yeah. Awesome. Well, thanks for sharing all this. And again, look forward to staying in touch, and we'll talk again soon.
Yeah. Thanks for having me.
Thanks for listening to this episode. Your support is truly appreciated. And if you can share this with a friend or family member that might benefit from the information, remember, our goal is to motivate and inspire others to take action and to build wealth and to become well off. Enjoy the rest of your day.